Welcome everybody to episode 3 of our crash course here at V2 Trading. Let's dive straight into this and let's make this short and sweet for you guys to understand and actually start practicing. So, today what we'll be discussing is we'll discuss the overall element of supply and demand, how you mark these zones, and the overall importance of this as well. So, to start, let's talk about supply and demand and what exactly is supply and demand. So, supply is where a lot of liquidity or units are available. Think of this as when sellers heavily exceed our buyers. Think of it in a real life perspective as well. These supply zones happen when, for example, let's go back to the car dealer, a billionaire is trying to buy cars and they need lots of supply. Let's go back to that example from last episode. Supply is where, imagine there is a supplier with over 10,000 cars available to be sold, but there are only 2,000 people wanting to buy one car each. That means that supply heavily overexceeds demand, causing the price to fall to meet the demand. Now, demand is where there are a lot of buyers marking interest in a product. So think of this as if it's the other way around. There are 2,000 cars available, but 10,000 people want their hands on one. So either the price is heavily going to go up in order to balance things out, or they would have to start making more cars, but typically the price will have to go up in order to do this. This is why we typically match demand zones with buyer sentiment and supply zones with seller sentiment. And imbalances occur from these zones when demand heavily exceeds supply or supply heavily exceeds demand. Because think of it like our examples as well. If there's too much product but not enough buyers, then price would have to go down in order to increase more buyers. But if there is a lot of product, or if there's not enough product but a lot of buyers, you need to increase price to remove some of those buyers to actually sell each and every product. So let's take a look at this on the charts as well. I'll be marking everything live with you guys. So here's a blank chart on the 4-hour, and let's just take a look. Let's go to June 2024. Just a random portion on the chart. I'm just looking for zones, and I'm going to teach you how to mark these zones as well. So to mark these zones, let's go back to our slideshow really quickly. So to mark these zones, we're looking for an engulfing reversal candle followed by an imbalance on the chart. So these are some chart examples. You see an engulfing reversal candle followed by imbalance followed. This heavily shows this you would regard as a supply zone, and this you would regard as a demand zone. Demand buyers, supply sellers. In these areas, we are not necessarily going to hold this, but these are great areas to hold as targets, stop loss, or even take a trade using this as additional confidence. I can show you some examples right now going back to the charts. So let's take a look. I see a supply zone or a demand zone right there. I see another demand zone right there. And why? It's because look at it. Ooh, that's not even a demand zone, but this you could typically mark as a demand zone because it's so close to being a seller candle that you can mark. So look at this candle right here. It's basically a seller candle, and we have a large engulfing reversal candle that continues the price up for a long time. There's another great supply demand zone right here. Look at that. So let's take a look at this as an example, right? Say someone is getting long at this point because they have other confluences, right? You get long somewhere like that. What do? They keep the bottom of this as a stop loss, and they target the top of this range. What happens? They get stopped out. But if they did not keep it here and suppose they kept it down there, look what would have happened. They would have taken almost triple the amount of loss as if they simply kept it here. Now think of it in the other way as well. Say we saw this nice imbalance creating a gap here. You'll learn more about this in the next episode. But say we had a nice entry model here where someone looked to enter in the shorts somewhere there, right? And they placed their stop above here for who knows why. And where did they target? They targeted the 50% level of this supply zone or this demand zone. And what happened? Price literally touched this supply zone and then started seeing the spikes back up and much more, right? It shows that these supply zones and demand zones are very important areas of interest, and it's important to understand that as well. Let's take a look at some actual supply zones, not demand zones this time. So let's go. Okay. Let's see. Okay, this is a pretty significant zone right there. I'm just removing the previous zone. All right, look what happened. From this is a demand zone. So from this area, what happened? We pushed all the way up until we found the next level of resistance. And where was the resistance? At this supply zone right there. Nobody would have known that just looking simply. We have to understand the overall market sentiment by looking at these candles. These zones essentially just tell us where liquidity is being placed in the market at high volumes. And if you know a lot about liquidity from the last episode, liquidity is absolutely essential. This is just another way to show that there's large amounts of liquidity in this area, so you have to be careful when actually trading in this area, and may take it as an area to either take profit or keep your stop loss. Additionally, you can use this as an entry model as well. Use this as an area for entry if you find a proper entry model. So there goes that with the chart examples. I want you to look for these examples on your TradingView, whether that be the paid version or the free version, and look to take some trades and take some paper trades. See how you can actually understand these supply zones and demand zones on your own. Give it a shot. So like I mentioned before, these zones show us where there's heavy liquidity. These are key levels for targets and reactions. And you can combine this with V2 retracements for further confidence. None of these elements which I discussed should ever really be used on their own. You have to use this with overall market sentiment data. You have to use this with in-depth, in real-time order flow. And you have to use this in confluence with other analysis on other commodities and indices as well. So I know this is a pretty quick episode compared to the other episodes, but I just wanted to introduce this topic of our zones and supply and demand so that you guys can take your time to practice on TradingView and give it a shot until I see you guys tomorrow, where we go more into fair value gaps and more. Today you not only learned what supply and demand is, you also learned how to mark them on the charts, and you learned the importance of the charts and the zones in V2. Now, please take your time to practice before the next episode tomorrow and see what you can figure out about these zones. The more you practice, the more screen time you get personally, the more you will succeed. Although you can learn a lot from trading, the majority of what you will learn is through cause and effect, and also through trial and error. So it is important to get your trial and error done through paper trading, so you avoid as much of those big losses as you can, although many traders do undergo those big losses before they are successful. Thank you so much. If you have any questions, because I know this is quite new to you, please join the Discord in the link in the description, or leave me a comment down below and I will try to answer them as soon as possible. Thank you. See you guys tomorrow at the same time. This is Premier. Goodbye.